Hello.
Hello.
Hey, how's it going?
Great, Johnny. Great to see you.
Yeah, you too.
I think Oscar's just making this live now. So I think you got here just for us to be live. So I think people are watching us now. It's very exciting.
The nick of time, as they say.
Yes, yes. There is so much good stuff for us to talk about today,
Oh, we
Johnny.
are
I
going
am
to have a
excited.
lot. Yeah, we are. Well, good afternoon, everyone. Welcome once again to the CoreConnect Course Summit webinar series 2021. As always, we have great discussions, and today is one that's a little different than others because our guests today are really going to bring a different spin to the whole thing of bringing a crowd, a community of people together for a greater good that always isn't the same objective of just raising capital. And I wanted to put that in because when I first got started in the crowdfunding space, Devin Thorpe was one of the first people who ever interviewed me when he had his show. And I waited this long because, well, he'll tell you his journey. And so I'm excited about today's topic because it's so different than everything we've ever done before. And Johnny, I thought you were perfect for this because of your background. I think you're going to relate to this. And I'm looking forward to the two of you. But first, before we get started, Devin, if you could please introduce everyone, yourself to everyone, we'd really appreciate that.
Well, let me just start by saying thank you very much, Oscar. It's a thrill to be here. I'm especially honored to be on with Johnny. I'm really excited to hear what he has to say because he's got there's so much exciting stuff going on right now in Johnny's world that he deserves and will get all the attention. That's great. I have been advocating for, talking about, writing about, working in, helping nonprofits with crowdfunding for almost a decade. But as an old investment banker, I am especially enthused about crowdfunding, equity crowdfunding. And, I contributed to Forbes, wrote hundreds of articles, including many, many articles on crowdfunding, again, oftentimes with the focus on equity crowdfunding. Drawing on not only what I was seeing and talking to people like Johnny, but in drawing on my investment banking experience, which is, as Johnny can tell you, as a registered firm, it's sort of like being a light broker dealer. And so as an old broker dealer guy, I relate to the situation Johnny finds himself in at WeFunder. But I put all that aside last year to run for Congress. I'm not a congressman, so you can infer what happened in that race. And now I'm on to other things and trying to sort out what my life will be. But it's great to be back with my crowdfunding friends today. So thanks for having me.
Great to have you. And John, it's always great to have you back again. Thank you. Please take a moment to, but he put you such on a pedestal. Can you say any more?
Yeah, thanks so much. Always a pleasure. Yeah, I lead the fundraising team at WeFunder. We're leading RegCF platform, and my job is to help great startup founders, I guess, learn about WeFunder and regulation crowdfunding, and then decide to raise part of their round or all of their rounds from their fans and WeFunder investors.
Well, that's perfect. Thank you. And look, the conversation today, obviously, it has everything. It's in a monumental week, right? Everything getting increased to 5 million on the regulation CF. It's interesting how time goes by, right? Devin, do you remember the days it was just 1 million? Now we're talking a 5 times increase to 5 million on Reg CF, 75 million to Reg A. And this topic cannot be more important than ever, building your community, right? And I thought I would bring the two of you together because we're bringing it from two different points of view. And so let's start with you, Devin, because you wrote a book on this. You didn't just write it, you lived it, and then you applied it when it came to joining Congress.
Yeah.
Please.
So I've done a ton of crowdfunding over the last several years, including for my congressional campaign. So this is kind of fun. But one of the things that I want to focus on is that WeFunder just launched its own campaign last week. or earlier this week. Johnny, I'm losing track, but you can tell us. But one of the key things that intrigues me is there have been a little bit of changes in the rules around what you can say off the platforms. It's still pretty limited, but it is expanded to include a little bit more information. And so I think we have a really rare opportunity to let Johnny tell us what the WeFunder story is, as much as he can, to demonstrate what it is that we can do as we communicate with our communities, because that's one of the key issues with building community, is what we can say to them off the platform to get them on to the platform to look at more information.
Yeah, the new laws that rolled out on Monday have liberalized your ability to communicate in, for example, demo days off the platform. You're supposed to link back to the platform, and you are definitely not supposed to talk about the terms of the offering off the platform. But yeah, it's been pretty. I think obviously one of the great things about regulation crowdfunding is that, yeah, now you can talk about the offering publicly, everywhere, and yeah, so I can talk about WeFunder. We have our own offering. We're partnering with Honeycomb Credit, which is a RegCF platform based out of Pittsburgh. I've known those guys for a couple of years, really great guys over there, more fixed on oftentimes small businesses, but we're partnering with them to do the WeFunder raise. And so, yeah, you can go to wefunder.com/WeFunder and invest in a RegCF campaign into WeFunder. The minimum investment's $100, and it's been a really exciting few days. We launched it on Tuesday, and we've raised several $1 million from thousands of investors at this point, and it's been so fun. We have an investment Slack channel where we see all the investments come in, and then all these investors are putting notes on why they invested in WeFunder. And it's been so fun to just read all those comments and read these reasons why people are investing. Like, we believe in your mission to save capitalism, or I know I'm a founder and I raised money on WeFunder and had a great experience, and so now it's cool to be an investor in the platform. So I always extol the virtues of investment crowdfunding, not just as a great way to raise capital, but also as a way to recruit an army of customers and brand evangelists and ambassadors. And obviously that's kind of what we're talking about here today with building your community. And for me, if there's like one company for whom that will be incredibly valuable, it is WeFunder, right? Like, if we can recruit thousands of investors to invest in WeFunder, then hopefully, if they're founders, they'll choose to raise money on WeFunder. If they're angel investors, they'll choose to invest money in campaigns on WeFunder, or bring us founders that they know who are considering raising money themselves. So yeah, it's really exciting for us to be eating our own dog food, as they say.
Yeah, that is exciting stuff, and I appreciate you talking both about the offering and about these new rules that kind of expand what you can say. And I think that demo days rule is an especially important rule, because there are all kinds of platforms that are organizations, schools, et cetera, that are doing demo days kinds of things. And the old rules kind of seem to say you couldn't do that. And so it's great to have the clarity that you can.
Right.
No, sorry. I when I hear your voice, Devin, I feel like I'm the one in the audience. I had to remind myself, hey, wait a minute, I'm the one who's no. So yes, it goes. Actually, a lot of our colleagues, by the way, at around our ecosystem are investing in WeFunder to go through the journey experience. I mean, a lot of people who have been doing Reg A's and Reg D's traditionally didn't, but now it's amazing what it's changing, right? But through that change, I think it's important people realize that trust they have with their community didn't come overnight. That community they build and they've earned it, and that's why their success or their race is the way it is because of that community building. And that's the word I feel like that's one area that companies need to still understand. I've been talking a lot lately regarding the fears that I have about the increases and they're not fears that there'll be fraud. Actually, it has nothing. That's not my fear. My fear is that, are we going to leave the smaller companies behind because they're no longer big enough? Because we've had a number of platforms talking about this. So I want to give people an opportunity to understand what it takes to build a crowd. And I'm coming back to you on this one, Devin, because look what you did. You were never a politician before. And I know people go, what politics and capital raising? Trust me, they're both equally the same.
Yeah.
Right?
That's right. Politics in America, sadly, politics is crowdfunding.
Yeah. So you went in there as a newcomer, brand new. You had a show, you wrote books. Okay, that was it. You were a broker dealer, but that being a politician is a totally new. And you went in just like an entrepreneur goes to the journey. And the first thing you started doing was building a community. That I noticed immediately. So how important in building that, and what steps did you take? Because I think this applies to everything, because the success that we funded today is based on this. I'm sure of it. Please.
Yeah. So, I think the fundamental principle, and this always surprises people, and Johnny will demonstrate, I think some great insights about how you grow things huge. But crowdfunding always begins with that inner network, right? So as I launched my personal, congressional campaign, as I've helped other people with their crowdfunding campaigns, it always starts with your personal network. You've got to bring those folks in. If you can't get a little bit of momentum from the folks close to you, you'll never expand outside of that network. So there's a temptation in crowdfunding to start with the crowd, thinking that the crowd is somewhere over there. And there is no crowd over there unless you bring in your family and your friends and the people who are close to you. And so that's kind of thing one. Thing two is trying to get media attention. And that's a little bit tricky with Reg CF. And I really want to have Johnny talk about that. But one of the things that WeFunder has created that is, I think, maybe still unique, but if not unique, it's uncommon or new at least. That is, they've created this idea of a lead investor that gets a carry. And the idea is that implicitly or explicitly creates an incentive for a lead investor to join in, and also for them to help raise the money. And so I'd love to hear from Johnny if that's working, if that's and how it's working. And there are also some regulatory questions that come up about that in terms of incentivizing, giving someone a financial incentive that's not a broker dealer to be helping with the race. So I'm really curious about how that's working. I hope Johnny will tell us.
Yeah, absolutely. I can talk to that. And it is timely because, we rolled out lead investors about this time last year. So then every company that launches publicly on WeFunder has a lead investor. Not putting in a huge amount of money, not like a lead investor, VC lead investor in a Series A. I'm writing a $2 million check, but average on WeFunder is 25K, and some lead investors putting in 50, 100K. And there's kind of two primary roles of the lead investor, I would say. The first is help to negotiate the terms of the offering. So obviously, main focus of this webinar is like building your community, which is super important, determinant of success of a Reg CF campaign. But another determinant of success is making sure that the terms of your investment are compelling to investors, right? And I think one of the risks that I've seen, and I've seen this on WeFunder over the last few years, as well as other platforms as well, is if you should be valued at a 5 million valuation cap, let's say, and you go live with a 50 million valuation, then that's just not in the right ballpark, right? And so, if any investors do invest, then they're getting a bad deal. But probably the bigger concern is no one's going to invest because that valuation is much, much too high. So partly one of the roles of the lead investor, putting in their own money into the deal. And what our CEO always says is, unless you're putting money into the deal, then your opinion on valuation and terms doesn't really matter. So they're putting their money into the deal and they're negotiating on valuation, and is it priced around or a convertible note, or is it a rev share deal? So that's the first role of the lead investors, help set the terms. And then the second is around voting for the shares of the individual investors. So again, I think it's relatively unusual, maybe unique, but the investors in WeFunder deals actually have protection, so that they can't, or at least they can be, vote as a block and not, and less risk of being pushed around by VCs in a follow-on round, let's say. But the shares are voted for not by individual investors, which will be a nightmare for the founder to have to collect thousands of signatures in the event of a follow-on financing. But the individual investors' shares are voted for by the lead investor. So that's the second role that the lead investor plays. So the founder only needs to collect one signature, logistically simpler for them, but individual investors have protection. And to your point, Devin, we had hoped that a lead investor would be able to earn carried interest on the Reg CF round. It's been made clear by the SEC that that is not possible for the reason that you mentioned. We were disappointed by that, I would say, because for us, if you can incentivize people to bring high quality deal flow to Reg CF platforms, e.g. through carried interest, then that will bring better deal flow to WeFunder, and ultimately that will have better ramifications for investors' returns. So that had been our hope in potentially looking at compensating lead investors with carried interest, but at least for now, that's been made clear by the SEC that we can't do that. So maybe that will change down the line, but for now, lead investors are not being financially compensated for playing the role in terms of carried interest.
As we think about Oscar, as we think about expanding the community, after we talk about the lead investor and starting with friends and family, one of the things is as you develop a list, and maybe it's a list of customers, a list of past investors, who knows. One of the things I've learned that I think is surprising to people, and I'd love to get Johnny's take on the regulatory guidance around doing this right, but I think you've got to get on the phone. And that will surprise people, but nothing works as well as calling someone one-on-one and saying, hey, I want to tell you a little bit about my deal. I'd like to encourage you, go to the website and check it out. Text me, email me.
There speaks a congressman, Devin.
What's that?
There speaks a congressman.
Yeah, but the interesting thing is, I agree with that. And people would say, well, hey, wait a minute, but that's old school. Why am I doing crowdfunding if I have to pick up the phone? I think they're missing the point, but I do agree with that. But I think the bigger picture here is that, recently I noticed something. I was just chit-chatting with a few other lawyers. I said, I noticed something very interesting the last couple of weeks. I'm starting to get emails from Reg CF issuers cold calling me over email. And I've been collecting them. And I said, what was interesting about it is that they don't know me from a hole in the ground. They just know me as Oscar with my email address. And they immediately went right to hey, we're a great company. We're listed on this platform. Click there for our Reg CF offering. And we've gone to that stage, which is, they have to be careful with that because, it's not even an issue of privacy. I don't care about that part. Sorry, I do, but that's more of a regular. I'm talking about how people will perceive this rather than that part. That's not building. That's not. I don't see that as community building. I see what people like companies like WeFunder are doing, creating a community of people, bringing the greater good. They didn't do their offering, before. They did it now. They have a large enough crowd. They've earned the trust. They're not going to get everybody. That's just the nature. The thing is, you need a fairly significant crowd to get you started. And I believe that we're almost leaving that behind. I know it's going to sound really weird. There are companies now selling crowds. How do you feel about that? I finally met a company that is actually selling crowds. And I say, you got to be kidding me. No. We've grouped them into different subject matters. I'm sorry, I don't even know what to call that. It's great for crowdfunding.
Yeah, I would say, I think there's a balance, right? So I totally get where you're coming from, and I agree. And I 100% agree with what Devin said as well, right? Like, no one, and at the very least, like, if you on a spectrum between you're talking to your mom, right, and your sister and your close friends, which is the kind of inner concentric circle that Devin's talking about, right? And then you're doing kind of like Facebook ads, right? Like at the very least, the return on your ad spend of spending money on Facebook ads, if you have $0 in your campaign, that's going to be very, very expensive way for you to raise some money, right? Whereas like if you've got momentum from your customers and your family and friends and LinkedIn connections and angel investors, and then you spend $1 on Facebook ads, the return on that ad investment is going to be way, way higher. So I 100% agree with what you guys are saying. But on the other hand, I do think there is a role to play in what you might say cold outreach. Like oftentimes, I think if companies are running a Reg D round and they're raising from angel investors, they're saying, okay, what angel investors might be the most interesting for me to connect with in order to fund my company in this round. So that's one example, even in conventional Reg D fundraising. But then within Reg CF, like Chattanooga FC went on the TV, right? On the local TV, they raised 900 grand from 3,500 local Chattanoogans, and probably a lot of people in Chattanooga, not known as one of America's great soccer towns, until Chattanooga FC's became the Green Bay Packers of the USL. So maybe people in Chattanooga hadn't heard of the company, but then they got on the local TV, and in a sense, that is kind of cold outreach, right? So the people that watched the local news in Chattanooga that night didn't know of them. So I think there's a balance, and one of the awesome things about Reg CF is the ability to market, publicly promote, get the word out to people that have never heard of your company before. And the ideal, obviously, as with all marketing, right? If you can try to target the right audience with the right message, then maybe you can sell your product to them in regular marketing, or here you can sell your investment opportunity to them in investing. So I certainly don't mean to push back at all on what either of you guys are saying, but I do think one of the benefits of Reg CF is you can do both.
Yeah, listen, I'm not opposed to email marketing because we use it. But
email and social PR, right?
Like
all sorts of marketing, yeah.
100%. What I was saying is, well, maybe
it can't substitute. It can't substitute for.
It can't, and they should have approached me They should have approached me on, hey, here's my company. This is what we're doing. Would you like to learn more about my company first? And then the second email wouldn't seem as abrupt. Not abrupt. Odd. Because I don't know you. Do you know what I mean? Because
Oscar, given that we've now known each other for years, had many conversations, let me tell you about WeFunder's raise, wefunder.com/wefunder. So
no, but it's true. But thank you for that. And I brought this topic back on because not that it disturbed me, but it. Under the wrong hands, it is disturbing because they will never understand. Okay, so I go to a group that's got 100,000 groups for me. Oh, you don't have to, I'll build it for you. I already got to build. Great. So now you've got 5,000 shareholders in your company. What are you going to do? Well, what do you mean? They're just shareholders. No, that's not what they bought into. You said it. They bought into the vision, the products, everything in your company. So you have I believe we got such a great duty to these individuals because we've been given the privilege to allow them to invest. That's one. But as owners, as entrepreneurs, we need to understand how to nourish that relationship beyond I'm a company, you're my shareholder, and I'll do quarterly meetings with you, and that's it. If we go that path, then we might as well just become pubcos. That I come from that world, and David always says it's destroyed because the little guy doesn't have a chance.
One of the things Johnny mentioned in passing that I think is really important is PR and media attention. And Johnny's offering was just launched a couple of days ago. There was a great article in Crowdfund Insider about the raise. It highlights the valuation. It's a nice little valuation, Johnny. Congratulations, 160 million. So
I'm not going to talk about the terms of the offering.
Yes, I know you can't.
Nice try, Devin. Nice try, but I'm not falling into your trap that you've laid for me.
but I think it raises an interesting issue because of the regulations around what you can say on and off the platform. Johnny, I'd like you to give us some guidance about best practices for getting media attention, because I've done a lot of crowdfunding campaigns over the years, and the difference between moderate, basic success and blow the doors off is media. That's what happens. It's hard to pay for at any price the endorsement value you get from having someone in the media talk about your deal in factual or favorable terms. It's really high value. So given that, Johnny, what can you tell us about how to do that in a best practices compliant sort of way?
Yeah, I mean, I'm going to be the contrary on this call, obviously, because I mean, I will say I might push back a little. Both because I've seen it both ways. I've seen companies that have raised, a lot of money on WeFunder very quickly with no media, and I've seen companies that have. There was a company that was in the New York Times for their WeFunder campaign that didn't really do anything. It wasn't like front and center, but it was certainly mentioned in the New York Times article. It did very, very little. So, but having said that, I mean, to answer your question, I mean, at the end of the day, I think like it's about an amazing story, right? So, and I think it's maybe almost easier to get that media attention during the campaign if the campaign is like explosively successful maybe than before it. But if the company is a very, very exciting company, if the founders have a very, very exciting story, if it really makes sense for them to be doing that themselves. But I think I'm not sure that kind of media attention is necessarily, or conventional media attention is necessarily quintessential to raising even 5 million.
Yeah, interesting.
I have somebody here who wants to ask a question. So the one thing about us here is that when we have, because we do have Johnny's been on the show webinars before, and somebody would like to ask a question. Henry, you got a question to ask.
Hi, hello, my name's Henry. I had a question about what you can and can't say, off the platform. So you've kind of made it clear that you can't talk about your terms, but could you just be a bit more specific in terms of what you can do with online or digital advertising or print advertising or TV, whatever it may be? What can and can't you say? Great
question. All right. So Johnny, Johnny's background is probably getting a little quick. I mean, with Reg CF, as Devin was alluding to, up until Monday, there were a lot of restrictions. There still are restrictions in certain things, and television is definitely one of them. That is and again, I just want to make sure, if you're promoting your company, everything's a go. You can do TV commercials, you can do ads, you can do videos, and you'll find it that a really good example for you to see how it's really done well is when you watch companies on Reg A. Good to have you back, Johnny. And in Reg A, you'll find that no company is ever selling the security. And the reason for that is because what they're doing is they're telling every ad is about telling you about the company. And that is all. Now, for them, they have the same issue that as long as the deal is live, television is still off limits to them. It's off limits to all of us. That's just the SEC, but there are other forms. But Johnny, he was asking, I don't know if you heard the question, it was very similar to what Devin had asked, what you can and cannot say on the while you're on the platform, and what forms of types of not advertising, but what can you use, social media, advertising, television, and so on. So I touched on the issue of television, and then of course just letting them know that you're not limited to what you can say about the company, but once you start talking about the offering, there are certain terms you can and cannot use. Please.
Yeah, I think so. Until the new laws changed, I mean, I think you couldn't talk. Technically, you couldn't say anything that wasn't on the platform off the platform. And if if you do like an event, I think we were told by FINRA that you need to record that event and uploading a recording of that event to the campaign page. And then you also needed to link back to the campaign page as well. So those were rules that were in effect until March 15th. They've been liberalized with the demo day point that Devin mentioned. But yeah, beyond that, yeah, I'm not sure
But there isn't an explicit prohibition on television ads, right?
No, it's more so the way it's occurring right now is, so there's a company out in California right now that does it, and the rule is you're allowed to use television to promote the company, and not that you're raising capital or anything like that in anywhere, and you can use that to draw attention to your company. When the deal goes live, that's where the SEC comes in. The SEC says, and part of that is that in order for you to do that, the investor needs to have access to the offering document, in which on television it's not possible. Yes, the new televisions do, but the SEC is going by everybody's television. Not everybody's got a 4K TV with a built-in everything. So until then, now there are people monkeying around playing with it. I caution you to please speak to the WE funder, to your lawyer, to get clarity on it. Get clarity on the messaging that you're sending out. Whatever firm you're working with that's doing your marketing, there are companies that specialize in this. They're called investor acquisition, and they've done this before. They work with the WE funders. They work with the law firms. They understand what cannot be said and said to protect you. So the good thing where we are today in 2021 is not where Devin and I were in 2012 and 2015, where we were all in a room asking questions. I think it's going to be like this. Do you remember the answer? Everybody answered the question. We think it's going to be like this. We think it's going to be like that. We think. What we're telling you today is we don't have to think. We do know what you can and cannot do, but it always starts with your lawyer. So the professionals are there, lawyers who do this. The platforms are there. The investor acquisition firms are there. Anything outside of that, you're kind of playing with in a playground that, not to say that they couldn't learn, please don't misunderstand that, but you are playing in a playground that could be a little bit dangerous for you. So you really need to be, because the SEC is monitoring things. Make no mistake. They are monitoring things.
Yeah, they've set an interesting booby trap for us, I think. And we ought to talk about that because it relates directly to building a community. But the new regs allow for issuers, entrepreneurs, to test the waters in advance of an offering. And so, Johnny, this is brand new. You guys didn't do that. And as I understand the rules, the issuer cannot indicate that they intend to use Reg CF. They can only say that they intend to raise money under an exemption from traditional registration. That is, they're not going to go public in the traditional way. They're interested in raising money. Are you interested in donating? They can put that message out to the community. And that's quite different from the testing the waters rules for Reg A, which sort of required that you say, we're going to use Reg A to raise money, maybe. Let us know if you would be interested in investing. And it seemed to be a helpful tool for Reg A. Johnny, how do you see this working now with Reg CF? I'm curious.
Yeah, actually, what you just said there, I didn't know. I didn't know you couldn't explicitly say we're looking at raising money for RegCF. And should disclose that I'm not a lawyer, and WeFunder can't give legal advice, et cetera, et cetera. I mean, I think like in principle, we're very excited about testing the waters, and we think rather than an issuer going through the rigmarole of getting financial review done, and spending weeks to file a Form C before they can talk about it, enabling them to feel out investor demand at the outset, I just think is going to be better, actually, on both sides of the spectrum. So for the long tail of smaller companies raising, Oscar's point about looking out for the little guy, I think this is a great win for the little guy, because you can just kind of try to see if there's a there before investing the time and effort to launch a campaign. So I think that'll kind of reduce the risk of failure and like misspent time and expense on the part of like a small business owner that is resource constrained. But then on the other side of the spectrum, I think the very fastest, the very best companies, right? Like if you're saying, well, you can't raise the money for 6 weeks to file a Form C, and then 21 days, even if you raise the $1 million on day one of the campaign, then like it's 21 days before you can close on the money, to be kind of 2 months before you can write a check, and then you're not getting into the best deals coming out of YC, right? Whereas now with testing the waters, being able to move a lot more quickly, I think it makes WeFunder a lot more competitive, and so can get into better deals. And again, going back to what I said earlier, for us, like investor returns, I mean, sure, it's about getting good terms for the companies that are on the platform, like negotiating for better deals for investors. And sure, it's about like, can we then help those companies to do well and grow? And is like raising money from the crowd actually adding value to them in terms of the capital and the customers piece, and helping them to grow into big companies? But also it's deal flow, right? And if we can't get the next Uber, the next Airbnb, because of the power laws and venture returns, and there's other types of investing on WeFunder other than just like venture investing. But within venture investing, there's a power law to returns, right? So Uber and Airbnb return the whole fund. And so if you can't get into Uber because that round's super hot and it's taking 2 or 3 months for them to launch, and so then they don't go the Reg CF route, then like the biggest power law winners are not going to do Reg CF, and that's bad for investors. And so I think on both sides of the spectrum, we're really excited about testing the waters.
It's pretty good. I got William, who's got a question here. William, please ask a question.
Thank you. I think I'm unmuted myself. Can you hear me?
Yeah, we can hear you.
Yes. Hi, Johnny. Been a while. Devin, can I mention our connection?
Yes, please.
Devin is on our team, and we plan to relaunch here in the near future. Here's my question: that I've read the inspiring language on the WeFunder charter, which is wonderful. In fact, I've borrowed it from time to time, and in my opinion, and this is a question, what percentage of WeFunder, the equity crowdfunding WeFunder campaign, was set aside for the equity crowdfunding investors? Do you know, or can you say?
As in of the WeFunder campaign that we're running right now?
Yes.
That's all open to the crowd. Actually, we haven't taken any institutional investors, or at least maybe there are some institutions in the crowd, but the whole thing's open to the people.
I didn't mean institutional. Here's my question: was most equity crowdfunding campaigns set aside 10, 20, maybe 30% at most of their company's total ownership for the equity crowdfunding investors? Am I in the ballpark?
I can't really get into terms, I'm afraid, just for legal reasons. That would be kind of implying a valuation in terms. So, but you can on the website we show the terms of the offering, and so you can you can kind of put together, kind of equity percentages.
I'm sorry, I was segueing away from WeFunder. I was just saying in general, most equity crowdfunding campaigns set aside 10 to 30% of their total ownership, their total equity for the investors, the equity crowdfunding investors, less than 50%. Would that be accurate?
No,
I think Bill, I think the answer to your question is yes. More narrowly, I would say it's closer to 10 and 30 in the past, because the raise amounts have been so small, right? If you're capped at $1 million, and if you're going to raise $500,000 or $250,000, you're not as likely to give up 20 or 30% of the shares in one single round. So I think it's been closer to 10 than 30 typically. Now that it's $5 million as a cap, I think we'll see that rise. Now, Johnny can't talk about their terms, and I'm certainly not an expert, but the valuation referenced in the Crowdfund Insider article suggests they're giving up a lot less than 10% in the WeFunder round right now. And again, I don't want to put Johnny in a difficult spot, but I think with the $5 million,
but that's not been, but that's
20% will be more typical, I think, than it has been.
But that's just saying because they're only raising 5 million, right? But if they would have said we're going to raise 10 million, it would increase their number. The number of shares. Look, any given company, there have been others that are raising. I think what WeFunder is doing is great. They're community owned. I think you guys are a B Corp as well, right? That's a big, a big part of it. So I don't think you can look at it. At least I'm going to give you what I see. It's not a matter of how much you're allowing. It's this is what you need. You need 5 million. So for 5 million, this is. But if you needed 10 million, you would give up more shares, which would be more of the crowd.
Right.
I applaud you for that, because most platforms, it's interesting. Some of the new ones that I've been dealing with, they go, Oscar, do you know some private equity? I go, I don't get it. The very essence of this business is the crowd. So why don't you go to the crowd?
Yeah.
Well, it's too early. But wait a minute. I never understand the logic of that, right? And I'm a big advocate of that. As Johnny already knows, our plan has been on the works to do a Reg A. Why? Because, and I'm going to keep doing Reg A's until I'm not allowed to do it anymore, because I see the power of it. There are companies that really understand what it means to harness the power of the crowd. And I think that's the wonderful thing. And over time, if the crowd can own 70% of the company, it's no different than, it means that you've raised X number of dollars and you will scale it, just like a VC round. The first round was at 10 million, the next round is at 100 million, the third round is it's the same thing. And each time you're giving a certain percentage away of the company as you keep growing. The only difference is that it's not one person anymore. There's 10,000 of you. I mean, isn't that exciting? 10,000, 20,000.
No, that's exactly right. That's exactly right, Oscar. That's exactly how it'll work. And it is.
Well, we're seeing that, Devin. I mean, look, what we couldn't do in 2015, we couldn't have a discussion about what it may look like hypothetically. But at CoreConnex, we see from an anonymous level, we see the impact this is having. We already know that it's not the millennials that are jumping up and down investing. It's me and you, Devin, the parents. We're the ones investing. And guess what we're doing? We're then transferring it to our kids, who are then flaunting it and saying they own it. I see that every day, being from a back end. I also see that we got unicorns in this sector. Nobody recognizes them. Why? Because the market only sees 2% of the companies that are venture backed. And what you guys are doing, I mean, look, I didn't want to make this into a WeFunder section, but it's great because seriously, Johnny, your timing was good because you are harnessing the community. You brought it in. of all the platforms, this is hopefully is a good example for everybody, regardless of what percentage. There's a valuation, there's amount of money you need. That's what it is. If you need more money,
100%. 100% agree with you. Yeah.
So
and, of course, WeFunder has an extraordinary position because it has been aggregating people whose mission it is to expand their own investor networks onto their platform. And so most of those people like what they're doing, like what they see on WeFunder, and they want to be on the WeFunder email list. And so now that email list is 1 million or 2 million people long. You know, WeFunder is in an extraordinary position for doing crowdfunding. Relatively few young companies have that kind of email list of people who are subscribing and want to invest in startups.
Unless you buy it. So William is back again. He's got another question. William, you're on.
I'm sorry. I don't know if what I was trying to say. It seems like most campaigns use this simply as a fundraising vehicle, equity crowdfunding. And I had my idealistic self wants to believe that it was created to create this more democratic and equitable business model. And so that's why I'm hopeful, and our company that we seek to launch wants to make sure that the majority of the ownership of our company is owned by the equity crowdfunding people. We don't want to use equity crowdfunding to just as a funding vehicle. If we're truly going to revolutionize how we fund companies and how we own companies, this Jobs Act equity crowdfunding legislation is wonderful. And
I think that's awesome, and we'd be super supportive of that. I do think, yeah, like if you look at the numbers, the vast majority of startups using platforms like WeFunder are using WeFunder as startups are normally using angels or VCs, i.e., raise, give up 20%, 10 to 20% of equity of the company each round. To raise the capital they need to accelerate growth. So I think your example is unusual, Bill, but it sounds like a really awesome and noble use case of these rules.
Thank you.
Yeah, I think it's going to be really interesting. I do agree with everyone who is looking at the regulation in a different way. Look, I'm a Canadian and I'm all in on the Jobs Act, all in. I've been all in. I'm 11 years in, probably Devin is probably a little bit longer. I'm immersed deeply in. In fact, I'm so in that I'm now supporting Jobs Act version 4.0 that David Wheel is launching called the Jump Coalition. And I'm going to support it. And why? Because we're not done yet. We've done a lot of great work. And if we want to keep supporting smaller companies, David always reminds me, he says, Oscar, when I got into this, when I met David over a decade ago, I'll never forget this. I mean, here I am coming from the public markets and hearing a person talking about democratization of capital. And why? Because there's all this money over here and there's all these companies over here. So what the problem was, we were blaming it on the intermediaries. Remember that, Devin? Oh yeah, the broker dealers were outdated. And okay, they're not outdated anymore. So what's the real problem? So the key is that we're just getting great momentum. But one message is always clear. The key to recovery in the situation in the US that it is today always has been and always will be the small businesses. They're the growth of the economy of the United States. He made perfectly clear to me. It's embedded in my head. Dr. Alan Mendelowitz is another one of the co-founders of Dodd-Frank. Once again, coming from the banking, the key to the United States is the small business enterprise. That's who we need to support. We need to create jobs, and it can't be just throwing money at it anymore, right? And that's why it's, so I commended everybody. The Jobs Act was to balance. The balance was allowing people the ability to participate, giving owners back the ownership so you could feel that you have a responsibility. Ownership comes with responsibility, and then to provide a market that's free but with the safety nets to protect, and we're getting there. We're finally there. We can say things like that now. We can say things like there's a company with almost 400,000 shareholders in a private company. 400,000. Yeah. They raised over 130 million to date, and it excites me every day, right? And you and I, Johnny, have another one that's shooting for 1 million shareholders. 1 million, Devin. 1 million. Could you imagine 1 million shareholders in your company? But they don't call them shareholders. I mean, that's it. They embrace it. So it's really exciting times in this journey. And you're seeing, for all of you that are listening today, you're seeing the work, what community build means when you see it not only from the theory, the academic side. This is what you're going to do to construct it. Just go to WeFunder. Forget about the fact they're a funding portal. Just watch what they did, watch what they're doing, and watch how it's being repaid by the crowd because of bringing everyone together. I mean, that's my, Devin, I don't know if you echo those words, but I'd love to hear your comments on that.
Oh yeah, for sure. You know, I think there's no question that global economic recovery requires a focus on small business. I thought it's a shame that Woody Neese had a brilliant idea that didn't get captured. And one of the reasons I was excited to be in Congress was to put this idea forward. But he suggested that stimulus money be allocated to matching funds for crowdfunding campaigns.
Yes, yes.
Really a brilliant idea to accelerate the impact of crowdfunding. I think frankly, the $5 million limit will create a similar enthusiasm around this because it makes this whole economy work, right? The business of WeFunder got a lot easier, and all the other platforms too. We keep highlighting WeFunder because Johnny's here, but there are a lot of platforms, and we should acknowledge that. But the business of being in the crowdfunding platform space is a lot easier on March 18th than it was on March 15th. And that's exciting. That is really exciting. It's good for small business. It's good for America. It's good for the world because a lot of people around the world are and will emulate what we're doing here.
Thank you. There you go.
Precisely because it's working.
Exactly. Thank you. And that's one of the interesting things about the Jobs Act that a lot of people don't know is that it became this kind of, let's call it a tsunami, because it was great. Every country around the world side commenting, they're going, we got to open it up. We got to open it up. And so Sherwood, Jason Best, do you remember, Douglas Elenoff, everybody, we're all going from country to country to country and country. And they were educating the regulators while we're educating the ecosystems. And look where we are today. So it is exciting. And you are right. If it wasn't for the first frontiers, the first evangelists, the WeFunders, the Republic, Start Engine, Seed Invest, Micro Ventures, and many, many others, Next Seed. I know a lot of them didn't make it for different reasons, but we are so excited. And obviously we welcome the new ones because the 32 million privately held companies in the United States have a path now that it's proven track record that if you do it a certain way and you follow the steps, the success is there. So Johnny, I'll leave the last words to you because I mean, today is WeFunder Day. So
well, yeah, I mean, I'm just really excited about the future of the space, you know, with these new laws, the 5 million cap, the testing the waters, the SPVs, which I don't think we even had a chance to talk about. I just think like, you know, WeFunder has been growing about 5x over the last year. We're 5x bigger than we were this time last year. And, you know, that's only going to accelerate now with these rule changes. So I think it's really, really exciting times. Reg CF, you know, over the last 5 years has been a drop in the ocean of Reg D, 506B funding. It's been very, very small. And, you know, the best companies have not been using Reg CF, some notable exceptions, but that I think now is about to change. So I was on Clubhouse on Monday on the day that the laws changed, and there was a guy who came in and joined. It was about 1 a.m. for him. He had this amazing Liverpudlian accent, Scouse accent. He worked for Crowdcube, which is the biggest investment crowdfunding platform in the UK. And he was saying that investment crowdfunding has become the dominant way of funding if you're an early stage startup in the UK. And that, I asked him the biggest lesson of the journey over the years at Crowdcube, and he said that, initially the thought was that it was about the money. And over time, it emerged that no, what was really the game changer for companies raising like Monzo, Curve, GoHenry, Revolut, Brewdog, these big names that raised through investment crowdfunding. And it's like the brand ambassadors and the evangelists, it's the marketing, the customers. And that for me, it's like, if we can deliver on that for founders that are raising through Reg CF and Reg A as well. And to your point, Oscar, larger sums, more investors. If we can deliver on that, then not only will that solve the deal flow question and get all the best companies, will just be a no-brainer for them to use Reg CF alongside conventional investors, right, like angels and VCs, but also then that will help those companies that do raise through Reg CF to grow into bigger and better companies that then delivers returns to the retail investors that funded them in the first place. And that is really when it starts to firstly grow and take off, but also generate the returns for investors that we all want to see and are working towards. So I think that the future is very, very bright for all of us working in this sector, and it's been a just exhausting, frenetic, but ultimately really, really exciting and fulfilling week.
Yeah, it definitely was. And to close off the week, the one part that I'm going to drop today for everyone is that for the Jobs Act, we now have, for the very first time, what we call the true end-to-end, where we can offer the shareholders the ability to off-ramp and monetize their investment, because we finally have a secondary market that can trade $10. That is a game changer in the market that will fundamentally change. They're only supporting Reg CF, Reg A, and Reg D's individual investors. And I know the funding portals are very excited to be partnering with this secondary market. This is a way, again, the success of the company, obviously, if you want to stay there for the whole journey, but if you need to monetize your investment, and there's a vehicle now, we didn't have the vehicle before. Now the vehicle exists. See, every time we keep adding more to this, and it just adds another thing that, wow, another reason why we're all getting excited. Devin, I'm so excited to see you. I know we started talking about your run at Congress. I hope, like everybody else, you get back on it and you do it again. I think it was a great journey watching you build your own community online. I watched you through Facebook. That's where I did it, and I supported you as much as I can in sharing your story. It was wonderful to see that, and that's why I asked him to. I was really excited, because if ever watched politics, we see one part, and I'm not here to talk about, but this was grassroots. Watching you in your yellow car, it was
my little EV cruising.
It was beautiful. You're at the gas station. And that made it real.
Yeah,
you know what I mean? And this is a lesson for all entrepreneurs. Make it real. Make your story real. Real is a perfect way. So thank you both for today. I look forward to having you and participating in this and looking back again, because I'm sure a year from now, it'll be amazing what we've all accomplished. And thank you everyone today for joining us at the KoreSummit Webinar Series 2021. We still have just over 30 webinars left. We're going to be busy. There's a lot of education to be done. There's still so many different parts to keep you updated, a lot of moving pieces. But till then, thank you to Devin and Johnny. Till next time, we'll see you guys soon. Take care.